Thanks for tuning in to this week's news recap. First headline, Ethereum's London hard fork hits mainnet. On Thursday, Ethereum's long-awaited London hard fork went live, bringing with it 5 Ethereum improvement proposals, each featuring code changes aimed at optimizing the network. Notably, London includes EIP 1559, which has 2 components. First, it adds a base fee to every transaction on Ethereum, intending to make gas fees less volatile and, perhaps, just slightly less expensive. Secondly, EIP 1559 has begun burning those base fees, sending Ethereum to an inaccessible address, leading to an Ethereum first, as tweeted by Alexander Fisher. Quote, "We just had our first deflationary Ethereum block. Block 129,65263 had a block reward of 2 ETH, but burned 2.078 ETH. ETH is ultrasound money." Fisher's excitement about Ether as ultrasound money stems from the belief that by taking ETH out of circulation and therefore limiting supply, Ether's investment thesis as hard money, or what many in the Ethereum community are calling ultrasound money, will be very appealing to investors, especially in light of Bitcoin's dominance as a hard-capped asset. Such deflationary pressure on the asset, one could argue, is likely to be good for those long Ethereum, or as Jeff Benson from Decrypt put it, quote, "The less of something there is, the higher price it should be able to fetch." And indeed, it appears investors were buying the Ethereum hype in the days leading up to London, with Ether gaining about 17% over the past week, shooting up from the 2200s to the 2700s in the 7 days prior to the mainnet launch. As of press time on Thursday afternoon, Ethereum has burned over 1,000 ETH, while the price has hit a daily high of $2,818. In related news, Zuko Wilcox, founder of Zcash, wants the privacy coin to be more like Ethereum. In a blog post, he proposed that Zcash ditch its proof-of-work consensus algorithm in favor of proof-of-stake, just as Ethereum plans to do with a shift to Ethereum 2.0. Zuko wrote, quote, "While there are many who prefer proof-of-work, I believe that proof-of-stake would make Zcash more valuable to more people. The benefits are great and they far outweigh the drawbacks and risks." He cited lower security costs, energy benefits, and reduced selling pressure on miners as reasons for the change, amongst others. Next headline, CryptoPunks and NFTs, not in a bubble? On Wednesday, a CryptoPunk previously valued at $69,369 was sold for 1 cent. According to the block, the owner of the punk intended to make a whitelisted sale, but mistakenly made it available to the open market, where it was immediately snatched up. The buyer, however, still paid a heavy premium for the famous JPEG, as they spent 22 ETH, roughly $57,000, in gas fees to bribe an Ethereum miner to prioritize their transaction in the block. The average price of a CryptoPunk is at an all-time high, above $135,000. Additionally, data from the block shows that NFTs just hit a record weekly trading volume high of $339 million, breaking the previous record by a whopping 70%. CryptoPunks accounted for the majority of the volume, totaling $207 million. In other NFT news, it's an excellent time to be an NFT marketplace. On Wednesday, Maker's Place, the company that minted and sourced Beeple's Everydays, which sold for $69 million, announced a $30 million Series A led by Bessemer Venture Partners and Pantera Capital. Maker's Place plans to use the cash to, as Forbes put it, quote, "help eradicate blockchain foul play on its platform and continue homing in on premium NFTs." On Twitter, OpenSea CEO Devin Finzer pointed out the explosive growth in NFTs. Quote, "In 2020, OpenSea did about $21 million in total transaction volume. In the last 2 days, we did $95 million. The growth curve for NFTs is insane." Next headline, Robinhood's HOOD deemed too volatile for traditional finance. Trading for Robinhood stock was paused 3 times by NASDAQ on Wednesday after an explosive rise in the HOOD price during the early part of the trading day. After jumping from $54.45 to $65.60 at the opening bell, NASDAQ reported an LUDP code, which stands for Volatility Trading Pause, meaning a stock cannot be traded due to a dramatic rise/fall in the price. After a 10-minute pause, Robinhood ran up to $78 before trading was halted again. By the end of the day, the price had settled at about $62, up nearly 70% from its debut last week. Earlier this year, during the Reddit-fueled GameStop and AMC mania, Robinhood infamously halted purchases of certain meme stocks due to volatility, causing an uproar on social media and a subsequent meeting between Robinhood CEO Vlad Tenev and Congress. Next headline. DYDX Airdrop plans to leave out U.S. customers. DeFi derivatives platform DYDX is launching a governance token, following in the footsteps of Uniswap and Compound by decentralizing via a retroactive airdrop of tokens to its user base. 50% of the tokens will go to the community, 27% will be allocated to past investors, 15% to founders, and 7% to future employees. The DYDX token will give holders governance rights along with fee discounts for trading. Notably, the airdrop will have geographic restrictions, specifying that users from prohibited regions will not receive tokens. Quote, DYDX is not available in the United States or other prohibited jurisdictions. If you are a resident of, or incorporated or headquartered in the United States of America or another prohibited jurisdiction, then you are not permitted to receive a distribution of or transact in DYDX. Next headline, the acquisition business was booming this week. On Monday, NCR, a Fortune 500 company, announced the acquisition of LibertyX, a Bitcoin ATM operator. The purchase will bring over 10,000 Bitcoin ATMs to the software company, helping NCR offer digital currency solutions for banks, retailers, and restaurants. Voyager Digital, a $1.9 billion trading platform, acquired the crypto payment company Coinify in a deal worth $85 million. Coinify allows businesses to accept crypto while receiving payouts in traditional currency, something for which Voyager CEO Stephen Ehrlich has noticed an increasing demand for recently. Quote, we believe the USDC stablecoin is the best stablecoin on the market and that customers want to receive payments in that, Ehrlich says. We see this vision of payments being the next frontier on top of trading and investing. Coinbase has agreed to buy Zabo, a cryptocurrency data aggregator, for an undisclosed sum. Founded in 2018, Zabo provides APIs that enable financial applications to connect with users' accounts. Jump Capital has purchased Certis One, a blockchain infrastructure company servicing Solana, Cosmos, and Ethereum, to expand the scope of Jump's crypto market. While details are slim on how Jump will use its acquisition, Hendrik Hofstad, founder of Certis One, said, quote, we're incredibly excited to join forces with Jump and leverage their world-class talent and resources to drive forward our mission of advancing the state-of-the-art in decentralized finance. And finally, Fidelity Investments purchased a 7.4% stake in Marathon Digital Holdings, a Bitcoin mining company, across 4 of its funds, worth approximately $20 million. Fidelity joins other institutions such as Vanguard at 7.58%, Susquehanna at 2.7%, and BlackRock at 1.59% as an investor. Next headline. Messari led the way on the crypto fundraising front. Messari, a crypto research firm, has secured $21 million in a Series A funding round led by Point72 Ventures, the venture arm of the hedge fund, with $22.1 billion under management. Messari will use the influx of cash to build out its analyst program and fortify its governance and community management tools for DAOs. Zen Ledger, a crypto tech software company, announced a $6 million Series A led by Blockcelerate VC. CEO and former Unchained guest Dan Hannum remarked that, for Zen Ledger at least, the controversial infrastructure bill is a good thing, saying, quote, they're looking to collect $30 billion in crypto taxes. It's not the worst time to be a crypto tax provider. And finally, Trust Token, the team behind the DeFi protocol TrueFi and TUSD stablecoin, raised a $12.5 million round financed by Block Tower Capital, A16Z, and Alameda Research. TrueFi enables lending based on credit scores rather than collateral. Next headline. BSV and Popsicle Finance fall prey to hacks. BSV, a Bitcoin fork originating from the 2017 block size debate, suffered a massive 51% attack this week, according to Lucas Nuzzi, an analyst at Coinmetrics. Apparently, after an initial attack on Monday, the hackers gathered enough hash power to do some damage on Tuesday. Nuzzi continued, tweeting, quote, after an attempted attack yesterday, some serious hashing power was unleashed today at 11:46 a.m., and attackers are succeeding. Over a dozen blocks are being reorged, and up to 3 versions of the chain are being mined simultaneously across pools. Coinmetrics later confirmed the hack, noting that its blockchain monitoring tools saw a 14-block reorg of the BSV network. There is no clear indication as to the hacker's identity or motive at publishing time. DeFi protocol Popsicle Finance lost $25 million in an exploit this week. According to security researcher Mudit Gupta, quote, "The hack was complex, but the bug was simple." Gupta added that the error, quote, "has been exploited in like a dozen other protocols already." Popsicle Finance will be addressing the hack in an AMA on Thursday night, just after this podcast is recorded, so be sure to keep an eye out for how they plan to rectify the situation. Time for fun bits. Buy a sandwich with Bitcoin. Quiznos, a national sandwich chain, is partnering with Bakkt to launch a pilot that will enable customers to pay with Bitcoin at select locations in Denver, Colorado. Bakkt, in fact, will pay you to pay in Bitcoin. For customers who download the Bakkt app, purchase BTC, and use it at a Quiznos, Bakkt will send over a $15 reward in Bitcoin. All right, thanks for tuning in. To learn more about Kristen, the Blockchain Association, and the crypto provision in the infrastructure bill, be sure to check out the links in the show notes. Unconfirmed is produced by me, Laura Shin, with help from Anthony Yoon, Mark Murdoch, and Daniel Ness. Thanks for listening.